Hello, financial fans. We'll look at four stocks today, and these are four stocks that I think each have the potential to gain 50% or more in a couple of years. They've been beaten down pretty badly. And we are entering a new era, perhaps in a month or two or three. The COVID regulations will be lifted to the extent that some businesses, such as restaurants and airlines, might be able to mount a comeback. We shall see. But in the meantime, let's take a look at these four. I do not own any of these four stocks, but Monday, this coming Monday, this being the 20th, I guess that would be the 21st, 22nd, I might buy one of these. So let's take a look first at Duke Energy. And Duke Energy has a symbol DUK, and it closed at $90.32 this past Friday yesterday. The 52-week range, which is the first column on the left halfway down, 52-week range, we see it was as low as $62.13 and as high as $103.79, so it has some headroom at $90.32, and it has a PE ratio, the second column, the middle column, third item down, PE ratio of 33, and I would prefer for that to be lower, but for the Duke Energy Corporation, I guess that is not too bad right at this time. I think that will improve and get lower. The dividend yield we see down near the bottom of that middle column, 4.27% you get for holding on to it. If it stays right where it's at, you're still getting a good dividend. And if it happens to go up in value, the dividend will go down. On the lower left, we see that at Yahoo this is considered to be overvalued. All four of these stocks are considered to be overvalued, and yet we look at the one-year target estimate, $98. If it goes up $8 in the next year, 2021, that'll still be pretty nice. Now we'll move on to the next stock, and that is Consolidated Edison, symbol ED, the price $71.15 per share, and looking down the 52-week range, halfway down of the column on the left, 52-week range, $62 to $95, so it's got plenty of headroom where it could be moving back up, and the overvalued down at the bottom of the first column on the left is what they consider. I disagree with them. The average volume, 2 million shares, trade every day, which is good. PE ratio, third item down in the middle column, 1755. I like that better than the 33, and so I think that's good for a power company. And we look down at the dividend yield, over 4%, which is good. That's what you get for holding on to it. And they have a one-year target estimate of $79, so that'd be $8 upward movement if it happens to be a good guess on the part of the person who says that. But I think ED has opportunity to be moving upward, and the 4.3% is a pretty good dividend to be getting while you're waiting for all things financial to improve. Next item, General Electric. I owned General Electric for a while. I think I owned it, I think when I first bought in it was about $40 a share, and I held it for a long time, got good dividends, but eventually the price started dropping and I got out. Now it's $10.81, so we see down the middle of that first column, 52-week range, it was as low as $5.50 a share, and the high for the last 52 weeks, $13.26. So General Electric has a little bit of headroom, but I think it's going to do much better once the airlines get going. If the airlines get going, General Electric has a real good opportunity to show itself to be a good company like it was in the past, a blue chip type thing. PE ratio 30.71, and I would prefer for that to be lower. We'll see what happens as the year goes by, 2021. I think that will improve, and the dividend is teensy weensy 0.37, and they consider it to be overvalued, and they say it's going to $11.31 in the 1 year. I think it will go much higher, and it does depend on what happens with the airlines. That's my prognosis. So we shall move on to the next stock, which is the Southern Company, SO. SO, the Southern Company, $60 a share, $60.14. Look at the 52-week range, halfway down the middle column, or the first column on the left. And the 52-week range, it was as low as $41.96, $42 a share. And it was as high as $71 a share, and it's right there in the middle, $60 a share. It has plenty of headroom, and it could be a winner. PE ratio is 20.13, and the dividend is a very healthy 4.25%, so that looks nice to me. And they assume it's going to hit a 1 year target of $64. I think it will go much higher, but I've been wrong before, and we shall see what happens with this one. But these are stocks to look at Monday if you are thinking of buying into the market while it's kind of high and yet sluggish at the same time. There are a lot of stocks like SO here, a lot of stocks that are not shining stars at the moment. And if things happen in 2021 with the COVID regulations being stopped, released, turned off, whatever, I think some of these companies could do quite well. And I thank you for watching.